Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Before we begin, please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 46, the midweek Forex currency review. We're going to now take a look at the news followed by the German 30 index, just to show that support and resistance areas can be used on all types of charts. So here we have is the daily FX news calendar website. So what you're going to need to do is just make sure you change your current time zone to your local GMT time. And then today we're just going to apply the filter, and we're going to apply the filter to only look at high importance news. These news are generally the most important and what really moves. However, there's a lot of medium news which will also move the market. As we can see, the week starts off very slow again with no news on Monday and only some small news on Tuesday. However, the CPI news from China dropped down to 1.3 from the forecast of 1.5, and with this drop, this did actually move the Aussie dollar lower. Following up throughout the rest of the week, Thursday and Friday, we've got some more Aussie USD news coming through. We have the employment change, the unemployment rate numbers. Both of these numbers, if they are lower than expected, so if the forecast for the unemployment drops down below 6.2, that's going to be good for the Aussie dollar, or if it increases up to 6.3 or higher, that's going to be worse than the forecast. So we're going to see a greater decline on the Aussie dollar against all its other major pairs. So that's some news just to keep in consideration depending on where you are in your trading, and you may want to consider moving your stops to break even or exiting before the news, or taking it for a ride if you think it's going to be going in your favor. Also, later at the end of the week, we have the Euro GDP numbers coming through, and early Saturday for us morning is we've got the US retail sales and the Michigan confidence numbers coming out. Again, both of these have a good chance of affecting the market, and if you believe the numbers are going to be weaker for the euro, then it should continue on its downward decline. And if the numbers are good for the US dollar, that will also make the US dollar stronger, which could then see the Aussie dollar and the euro fall even further against the US. So this is the calendar review for the week, and I hope that's useful. So it's always good to make note of what's coming up so that you can make a plan and a strategy on what you want to do and how you're going to attack the market for the week following. Now let's take a moment to review the German 30. So we're going to look at reviewing the German 30. Now this is just an indices number, the same as the Aussie 200 in Australia and all the other numbers around the world. We're just going to look at the German 30 because of the euro printing money, or the stimulus program going on in Europe. I believe personally that the German 30 will be the one that will be impacted the most, because the German numbers coming out all the time are always a lot more positive, and with the printing of money, we're going to probably see the German 30 go to the new high levels. Just very similar as the US dollar was when they were printing money many years ago. We saw the US dollar go from way low levels to where they are now. We could see the same happen for the German 30, but this is just my assumption. So you need to make your own assumptions on that and seek your own professional legal advice based on those scenarios. But just to go to show how wave patterns and support and resistance levels works on all charts and all time frames, we're going to have a look at the German 30. So looking at the daily chart, we can see that after it's had a bit of a pullback from the beginning of Feb through to the August area, August-September, we've started to see some significant move higher. Now, first thing that we can notice is that this 200 moving day average here, this blue line, we can see it's hit that and it started to have a bit of a pullback. So normally we do see the 200 SMA causing a bit of a support or resistance area. So we could see a bit of a pullback from these levels. But just not taking that into consideration, we can also look at the stochastic indicator, and we can see that it's in the overbought area. So that's also giving another second clue that it's possible that this could be having a bit of a reversal on the German 30. What we then want to do is just grab our line tool and just drop some areas of previous support and resistance areas. Now if we drop one around this level here, all we want to be doing is just looking left. So we're currently here, we look left and we just say roughly where did it bounce? And we can see that roughly around these areas, it's been bouncing a little bit. So we could find, a bit of support around here, and it's looking like it's fighting that overnight. And it could, possibly break through to these higher levels up here. So this is a good band where it could possibly quite trade through. And that's just some areas we would want to look at for our support and resistance areas. We also want to look at lower time frames. Before we do that, we can just look left and draw some other levels in and other levels where the pullbacks could go. And generally the most recent areas are the ones that we like to look at. So if the pullback does occur, it could find support again round about these levels here. So what we want to do now is just drop down to the 4-hour time frame and just look for some type of wave pattern and wave cycle which may occur. At this stage, it's quite possible that we could say that, this is a beginning of wave 1. So the wave 1 movement here is pulled up and then followed by a wave 2 cycle down. Now this may not be a wave 2 cycle, this quite possibly could just be a wave A, B, C. So let's just draw those in just to draw those in, because generally on a turn we like to see a bit of an A, B, C cycle come in before the initial move. So if we call that wave A, wave B, pullback for wave C here, now wave C could also be known as the wave 1 cycle going higher. So let's call that wave C/1. So we're going up for wave A, down for wave B, and back up for wave C. So if we class it as a wave C motion, or as we talked before, we could class this as wave 1, down for wave 2, and up for wave 3. Now if this is wave 3, we would assume all this is wave 3. But if we wanted to just look at it and call this one wave 2, and this one here wave 3, they're fine examples of what it could be. The only thing I don't like about this one being a pullback for wave 2 is because a pullback hasn't really occurred enough. So if we grab our fib retracement tool and we draw that off what we thought might have been wave 1, wave 2 we want to see roughly pull back to 61.8%. That's a nice decent pullback. So it's very likely that this wave cycle here is part of the wave 3 cycle that we've seen. So let's just throw these out and we'll just go along and we'll just modify it a bit. And that's the good thing of looking at waves. We can modify it to where we believe the path should be. So if we were to redraw these levels again, we definitely see that we've had a decent pullback for wave 2 and a nice wave 3 higher. And obviously when we go for wave 3, so if we take this move up here for wave 3, we want to see a bit of pullback. So as we were looking on the daily chart, we can see that we thought there may be some resistance at this 200 SMA and roughly these support and resistance areas. So this is sort of going along with our wave cycles, and we're seeing an end of a wave 3. So if we want to see a bit of a pullback, we could see a bit of a pullback, come back to about 38.2, to 50% level. And these would also match up with our support and resistance areas. So if we were to see a pullback to these areas, it's a good opportunity if we want to continue going long on the German 30, that these areas might be a good place to look at buying. But obviously we need to take other things in consideration, and we may want to look for other indicators which may show that to be. What we're going to do now is just take a look down onto a lower time frame. If we drop down to the 1 hour chart, well, let's just go back. Okay, if we drop down to a 1 hour chart, let me just get rid of that. What we can see here is another wave cycle. So we can see that we've had the wave 1, back for 2, up for 3. Remember, we like to look for the largest AO for the wave 3 cycle, and we've finished wave 5. So on the 1 hour chart, it's very likely that we've finished the 5th wave cycle higher, and that gives us another indication that we could possibly see a reversal lower. So there's a few indicators, a few wave cycle patterns and support resistance area which are ending, and this all is a good indication that we may reverse. We may see a bit of a pullback before another move higher. So this is just an overall review of the German 30, just to show that if you always look left for support and resistance levels, draw those in and understand the wave cycles, and look for divergence as well. And divergence is where we start to see higher high in price, which we have here, but we see a lower low on the awesome oscillator. So here we can see a lower low on the awesome oscillator, the oscillator here, which is going lower, but the price is going higher. That's just another indicator that there is divergence and the market could possibly turn. So based on those scenarios, you could say you've got, a few points telling you to reverse. And if you're in the market, you could turn around and say, look, I'm going to take my profit now and just see what happens. Sit back and see what happens. And that's never a bad thing to do. We're going to end our session there.